You're listening to AI PRISM from Seoul Economic Daily.
It's Thursday, May 14. I'd like to share some thoughts about stock investors. Right now, retail investors in Korea are playing this massive multi-billion-dollar game of chicken with fleeing foreign capital.
And, well, they're actually winning.
Right, they are, but the macroeconomic floor beneath them is, starting to crack. So today's mission is to unpack the KOSPI's record close, a historic valuation flip between Korea's top two chip makers, and a hawkish macro update.
Yeah, because if you're trading right now, the old assumptions holding this index up might actually get you burned.
Exactly. So let's look at the data. The KOSPI just closed at an all-time high of 7,844.01 after a really sharp intraday reversal.
Which is huge, but the real story here is in the flows. Retail investors net bought 1.88 trillion won.
Which is roughly 1.33 billion US dollars, right?
Yeah. They essentially stood out in the rain and absorbed a fifth straight day of foreign net selling.
5 days. And that foreign selling hit 3.76 trillion won, so roughly $2.66 billion.
Right. And what you really need to watch is, where that capital is concentrating. We're seeing this surge in what the Korean market calls emperor stocks.
Oh, emperor stocks. For those listening, that means shares priced over $1 million won apiece, or about 700 US dollars.
Exactly. And a year ago, there was exactly one of these. Today, that count just hit a record 11.
Wow, 11. But to fuel that top-heavy rally, retail leverage is just going through the roof. That Bit2 or retail leverage trading just breached a highly watched risk threshold of 36.27 trillion won.
Which is roughly 25.7 billion US dollars of borrowed money.
Yeah, acting as a high-stakes shock absorber for all that foreign capital flight. Is that level of Bit2 actually sustainable?
Well, it creates a really fragile equilibrium. Korea's institutional buy thesis is still fundamentally intact.
Because it's heavily focused on semiconductor
and robotics earnings, right.
Yeah.
But when local positioning runs this hot on borrowed money, any macro shock just gets, severely magnified.
Yeah, and that retail leverage isn't just sitting in broad index funds, it's actively hunting for returns at the very top of the index.
Which brings us to that historic valuation flip between Korea's two biggest chip makers.
Yes. SK Hynix's 2026 forward price-to-earnings ratio just edged past Samsung Electronics for the very first time.
Right. It hit 6.79x compared to Samsung's 6.77x.
And SK Hynix closed at 1,976,001, so roughly $1,400. What is driving this?
Well, you have to look at the tech. SK Hynix isn't just selling standard memory anymore. They've effectively cornered the market on HBM.
High bandwidth memory, right? Like the stuff you absolutely need for AI.
Exactly. HBM is the critical bottleneck for AI chips. Because they hold the keys to the advanced memory that AI data centers desperately need, their operating profit is totally decoupling from traditional cycles.
Meanwhile, Samsung Electronics is dealing with its first major union strike risk in company history.
Yeah, and JPMorgan estimates that strike risk alone could shave 7 to 12% off their operating profits.
Wow, 12%. So for pair traders looking at this, does this mean Samsung's historic Korea #1 premium is just permanently dead?
Well, the market is telling you a fundamental re-rating has already happened. Investors aren't giving Samsung an automatic premium anymore.
They're pricing them purely on their ability to execute in AI hardware.
Right, and right now, the market sees both entities moving at similar multiples.
But, you can't price these tech earnings in a vacuum. The macroeconomic reality governing these valuations is definitely shifting.
Yeah, we have to talk about the KDI update.
Right, the Korea Development Institute. They're a government think tank that anticipates policy. They just upgraded 2026 GDP growth to 2.5%.
Driven largely by those semiconductor exports, of course.
Of course, but here's the catch. They forecast inflation at 2.7%.
Yeah, and the KDI explicitly warned that rate hikes are needed. They stated point blank that economic expansion and stimulus don't go together.
Wait, really? If the KDI is stepping out of stimulus mode, doesn't that pull the rug right out from under this whole liquidity-driven rally?
It definitely forces a rethink.
Doesn't it force the rally to survive purely on real earnings rather than, the hope of rate cuts?
That is exactly the paradigm shift you need to prepare for. Korea is consciously signaling a step away from fiscal support.
So it's a clear warning.
Yeah. If your trades rely on cheap money, well, fundamentals have to do the heavy lifting from here on out.
Which leaves you with a final critical puzzle to solve before you open your next position.
Right.
If the Bank of Korea actually follows the KDI's cue and hikes rates to combat inflation, what happens to that 36.27 trillion won or roughly 25.7 billion US dollar mountain of bit 2 leverage currently propping up the KOSPI?
That is the massive question you have to ask yourself.
That's today's AI PRISM, Stock Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a WAN-IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI PRISM from Seoul Economic Daily.